So Mike is the Chief Revenue Officer at Paxos. Most of us probably know Paxos already, but maybe you could start with just a quick intro.
Sure. Very upset no one mentioned PYUSD in the previous conversations, but I can give you all the info you want on that today. Paxos, we're a blockchain infrastructure company. We really provide the APIs to connect traditional finance, fintech, marketplaces, payments companies to the blockchain. So providing the APIs and then the custody, the regulated custody, the liquidity through a series of liquidity partners, the regulated stack for compliance, KYC, KYT, sanction screening, monitoring, et cetera. And then also the interaction with the rest of our ecosystem where whether that is to tokenize your own assets, to use one of our tokenized assets, or eventually to trade in all these tokenized assets. So basically providing crypto trading, stablecoin, tokenized gold, eventually tokenized securities and settlement of securities to the participants in the ecosystem who are already touching many of those assets.
Awesome, thanks. So you guys are a New York DFS regulated trust company, right?
It's a good thing some days, and it's a different day other days.
Yeah. So maybe jumping right in, no softball questions here. Can you talk a little bit about what the process was like with DFS when you were going to launch PYUSD?
Yeah. So NYDFS is one of the largest financial regulators in the world, and even though it's a state-level regulator, it regulates some of the largest financial institutions and asset holders in the world. You know, BNY Mellon, probably a great example, the largest, if not one of the largest, to be regulated at the state level. So NYDFS is no joke when it comes to the regulatory structure, the rigor, and I think they have almost 75 people now working full-time in the digital asset division. So, you compare it to some other states that have 0 or 1 full-time people in that space. So the rigor is very, very rough. The bar is very high. What did they want to know for PYUSD? So specifically, several people mentioned before about stablecoin management. So the state path has really been forged by New York State, and the stablecoin guidelines that the NYDFS has put out are, in their words, not just guidelines, they are the rigor that you will be regulated by. So reserve management, one-to-one backing, bankruptcy remote protection, multiple legal opinions to back that up, New York State banking law to back that up. You can't rehypothecate the assets. You can't borrow against them. You can't lend against them. You can't invest them in anything but short-term treasuries or cash. There's really a lot of layering to the ability to have an asset that you can call regulated by the NYDFS. And, I heard before someone mentioned USDC being regulated. For example, it's not a regulated token. Circle's not a regulated company. The token is not regulated. They have MTLs. That's about it. There's a very, very big difference in the stature of a regulated token and what that means to both the partner, in this case PayPal, to PayPal's regulators, mostly the SEC and international regulators. And, they want to know that this is going to be at worst $1 and at best that it could operate with some of the futuristic aspects of a stablecoin.
Awesome. By the way, I probably should have started with congratulations on getting that done.
Thank you.
Many of you probably know that I tried to launch a stablecoin in a prior life.
It's so easy.
Tried like the 3rd iteration of DM when I was at Silvergate, and obviously that didn't work. So the fact that you guys did it and did it with PayPal, I think is a very bullish signal to the whole industry. Can you talk a little bit about why you think PayPal did this, or why did they want to launch PYUSD? Like, why now? And there's some would argue some risk to it, right? Because there isn't necessarily regulatory clarity, although, DFS is leading the way. So can you talk a little bit about why PayPal wanted to do this? Yeah,
and it's very hard to speak for PayPal. It's a publicly traded company. They shared several aspects of this in their last earnings call. But, what is PayPal in essence? It's a large 450 million person network around the world with 40 million merchants attached to it. They process $1 trillion in payments a year. And they probably pay a lot of people to help process those payments, including the companies many of us know. So to them, I think this was really threefold. One, can they move money faster? Can they move it globally? Can they move money for near zero cost? There was a great example yesterday that someone posted on Twitter/X. A guy sent money to an employee in Malawi, and that employee received PYUSD instantly and received 40% more Malawi currency by having it through PYUSD than he did through Western Union. And I think it's a really good example of where stablecoins can really take very simple everyday use cases and just make them more efficient. And I think PayPal wants to be able to do that because that network eventually may ossify. And they don't want to be, and Dan Schulman, to his credit before he left, I think wanted to leave a futuristic sign that PayPal can evolve into the next generation. I think the second is merchants in many markets, and this was mentioned by several panelists before, merchants in many of their markets prefer to receive dollars, but don't have a really easy legal or transparent way of doing so. This enables their merchants to be paid through US dollars in a digital means without having to go through many counterparties, expensive FX in Argentina and Brazil and Colombia and Turkey and others. This is often the currency of choice. The third is that I think this just makes their product stickier to do the regular everyday things that their customers and their users are already using PayPal for, whether it be PayPal Venmo. By the way, PYUSD is the first connectivity in the history of PayPal between PayPal and Venmo, right? Which is crazy. They bought Venmo 9 years ago, and they never integrated it. They never integrated Braintree either. Now you can use PYUSD to connect actually all parts of their ecosystem, so it's actually acting as the glue, within their payments world that I think can make them a much stronger product, much stickier, and then offer a lot more futuristic use cases that to this room are not very futuristic, but to the traditional financial world, that PayPal has mostly operated in, really could be exciting.
Yeah. You touched a little bit on use cases. Can we maybe double click on that? And if you have another example of a use case, if you could share that, maybe to ask the question slightly differently, like it's maybe not intuitive, but like why would someone in Africa want PYUSD or do they want it?
Well, they have a PayPal wallet and they want dollars. So this makes that really easy without paying 30-40% currency fees and middleman fees and whoever else is taking part of that money along the chain. So I think the aspect here is that there's an employee who prefers to get paid in dollars. And by the way, this company could pay this employee 30% less by paying them in dollars, but that employee receives more money at the end of the day, A, because it's a dollar, and B, because there are not so many fees being taken out. I think we see this in Argentina. We see it in South America. Many of you know the company Deal. Deal pays millions of employees around the world. Those employees in many of those markets prefer to receive dollars because they can get much better purchasing power with that dollar. And because PayPal has this network already built, similar to the DM example of what Facebook had through all billions of users, you see an existing network that's now just being tapped and the velocity within it just being triggered in a very different way. So I think it's the desire for the dollar as well as the ease of access, since there already is ubiquity among PayPal, Venmo, and many other aspects of its system.
Do you think we'll see other fiat currencies on blockchains? Like, the US dollar is, the best example today, but like, do you think we'll see euros and yen and whatnot?
Absolutely.
And what I really mean is like at scale. I know some folks have tried that or whatnot, but like, do you think that it'll gain traction? Like, first of all, will there be some? And then two, like, will it gain traction?
So the way I look at the logic there is if you assume eventually all assets move to blockchain, Paxos is built on the philosophy that eventually every real-world asset, specifically financial assets, will move to blockchain. So if you think dollars, which today are the largest of the fiat currencies to be tokenized, eventually, unless you're assuming those currencies go away, which maybe there's an argument to be made in however many years that there aren't any more individual country currencies, I think sovereignty arguments notwithstanding, but you would say, okay, all those currencies are meant to exist for a pretty long time. And if tokenizing them makes those currencies more viable and valuable and global, well, then why wouldn't you see each of those currencies tokenized? I think what the real question is if the asset is tokenized, it's being moved around the world, the payment for it typically also has to be tokenized. So we believe that, again, if you're going to tokenize oil contracts or gold and move it and trade it, well, again, it's one thing to move the asset instantly, but then you also want to get paid instantly. So that's enabled through stablecoin. And if you want to get paid in Singapore dollar or Hong Kong, right, or Australia or the UK pound, well, then you're going to need that currency also to move on a blockchain. So I think it's inevitable. I couldn't guess for the life of me how long that takes, but I think moving the assets to the chain first will be the big step, and seeing the retail use cases start to gain traction around the world. PYUSD is very new. It's 8 weeks old, right? It pales in comparison to USDC and even our other stablecoin USDP. But more than 11 million people have traded PYUSD in 6 weeks. I think that's a really, really critical sign of where the retail world can be if given ease of access, right? And outside the crypto native world, where again, I think we'll see a lot more growth.
Awesome. What about the number of US dollar backed stablecoins? Like, do you think it's, is it 5? Is it 500? Is it 50? Like, how many do you think we'll see?
I think, if you go back to the 1890s, right, and you had all the different banks issuing their own currencies around the United States, and they had to be exchanged, and you needed to transfer notes and exchange notes, and you need verification. Notaries came about at the time to prove that you were the owner of this note, all this crazy stuff, right? Well, eventually that went away. You do unify these, but I think the way you unify stable coins is by making them all interoperable, and that also means that they actually all need to be equal. And not all stable coins today are equal. Calling Tether a stable coin, stable's probably not the right word there, right? Calling Luna a stable coin, our CEO was on the record in the Wall Street Journal 14 days before Luna collapsed, saying that's not a stable coin, that's an unstable coin. In fact, it looks like a casino. Well, that was a 19% interest rate casino that bore true. And even Circle, you look at USDC, because it's not regulated, we can't view it as interoperable necessarily as a regulated token. And a lot of the regulated partners we work with also cannot view it that way. They want a regulator overseeing the action of that token. And I think once you have uniform standards of reserve management, issuance, compliance, then I think you get to the interoperability, which means you can have an infinite amount of them. Again, as long as there's some oversight as to how they're issued and how they're managed. It gets a little complicated when it comes to cross-chain. Having a token on one chain, does it really equal the same token on a different chain? Probably not. How do you bridge that? There are some technological solutions coming about that we're working on, that other companies are working on to make that seamless without a lot of the risk that you saw in the past few years with bridges and other, kind of cross-chain mechanisms that were very, very risky. And I think those are Band-Aid solutions to eventually what you see is ubiquity of many coins. And I think there's also equal opportunity for a government coin as there's a retail coin or a commercial coin to be issued for any fiat currency.
Awesome. So on the blockchain side of things, like, do you think that if you're going to launch a stable coin, like, can you get away with doing it on just one chain, or like, or do most folks think that it needs to be multi-chain?
I think Nicola said it before, that eventually the demand is going to move toward the lower cost, higher throughput, higher velocity chains. There's no doubt that there's a real world case for that. A lot of our institutional clients who are now coming to us to use USDP or PYUSD don't care as much about that because they're moving very large amounts, but they don't care about speed. A lot of it is a matter of, is it going to move and will it be there by a certain time? That's different from I'm going to send 20 million payments, throughout the course of a week or even more. You take the case of an Uber or a very large marketplace. I think chains will continue to evolve. I mean, just think about how many new chains we've had in the past 5 years. So I think the technology on the chain side will definitely continue to open up new use cases. Certain chains are better for certain cases than others. Certain chains carry more information. Certain chains are more private versus public, and you see a lot of different kind of testing, in the area. But I think we're at probably V1 of 1,000, on the chain evolution.
Awesome. We have some questions here from the audience. So the first one, does every international PayPal user automatically have a PYUSD wallet, or are some countries banned? What local regulatory approvals were needed for this? So
PayPal is a unique case in the sense that in many of the markets that they have end users in, they are the licensed entity to operate. In others, we are actually the licensed entity to operate on their behalf, for example, the UK. So what happens is PayPal makes the decision as to whether they want to turn that market on for PayPal to provide the wallet, right? Some they have, some they have not, right? However, PYUSD, for example, is available on 11 exchanges around the world already. So any user who has access to those exchanges can get access to PYUSD, even if it's outside the PayPal wallet or Venmo.
Awesome. The next one here, I think you touched on it already, but it says, all major central banks are working on CBDCs. How do you see stablecoins and CBDCs coexisting in several years from now?
I think that's one of the most common questions, and I don't think they're all working on it. I don't think ours is doing shit on CBDC because my friend runs that project, and I know what he does every day. And it's call me and complain that he doesn't have anything to do. So I think what will we likely see? I think Brazil is probably doing this in the most sustainable, scalable way with the Drex pilot. We have some giant customers in Brazil, Nubank and Mercado Libre and PicPay and some others, and we partner with the Brazilian Stock Exchange, B3, to work on a bunch of different options. And what's happening is the Brazilian central bank, BACEN, has not only become the biggest fintech innovator in Brazil, they built a product called Pix. If you're not familiar with Pix, PIX, 100 million users in 14 months. It's instant payments, and it was built by the central bank, which in the U.S. would be like, Santa Claus is more apt to show up tomorrow, than our central bank, the Fed, building anything technological. I think FedNow is finally going to be ready in 2045. We'll be ready to use it broadly. But what they're doing is they're bringing the biggest participants in the market to come up with the real world use cases. And then they're asking a very simple question. How can we help? How can we help is a very interesting posture for a central bank. And that's actually what a central bank is there for. It's really meant to facilitate liquidity and provide reserve management and stability. And that's exactly what BACEN is doing. You look at the opposite case of China, where they have full control, so they can issue something top down, they could program it, they could control it. That would terrify me in the United States. I think the U.S. would probably have a civil war before we got to that form of a CBDC. But you are seeing a lot of countries that have very hybrid industries, meaning government-controlled industries, government-controlled mineral rights and mining. So you're seeing a lot of CBDC opportunity. Someone mentioned BRICS before. I think you may see tokenization of oil and gas and other things where maybe the BRICS then have their own settlement token that comes out of this. So I think you'll see a very wide spectrum. Can they coexist? Absolutely. I think the only way both sides, can really be sustainable is if they do coexist.
So when you guys are talking with other folks that are thinking about issuing a stablecoin, like, can you give us some color on who those folks are? Is it banks? Is it big tech? Is it payments companies? Like, who are the folks that are talking to you guys about potentially issuing a stablecoin?
Well, in the U.S., it's definitely not banks for many of the reasons you already know. 2 years ago it was, which was interesting. We had some fascinating conversations with very giant global, GSIBs about money, intra-company money movement and moving credit and collateral around the world so they could trade 24/7. They could still dabble in that a little bit, and so they could post credit in certain markets so they could trade on Sunday in New York when it's Monday in Singapore or Hong Kong. And there are some interesting cases that are coming up. But, we are the issuer of the stablecoin, and we're the reserve management, and we're the regulatory stack. So we tend to have two different use cases come to us commonly. One is, how can they use a regulated token inside of their regulated business? Because they often can only use a regulated token to do that. And a lot of those are regulated financial service companies, large trading firms, large broker-dealers, again, outside the U.S. more, large payments companies. Now, the other side we're seeing is the white label version, what PayPal did, and what we did for Binance. Now, Binance is probably a bad example, but at one point we had $25 billion of BUSD, in the market. And I think one of the most important things we've seen is the demand for large global tech companies that want a branded stablecoin. This is what, Novi wanted to do, through Meta. And I think what they want to see is not just that this will offer efficiencies within their ecosystem, but that it's actually safer than a dollar. And it's weird to say that, but there was a fascinating article about PYUSD and someone basically saying PYUSD in someone's PayPal wallet is much safer than the dollars in their PayPal wallet. And, if those of you know anything about banking, which this room probably does, it, can kind of get to the logic of where that comes from. And it was a really interesting article. And I was like, that's a new way of thinking that a digital dollar really is safer, and it is faster, and it is more secure, and it's more transparent. And the governments, they don't like to say it, but they love it because everything is transparent. And they can actually seize it and freeze it. That's very hard to do with a suitcase of cash. But you're seeing this happen in many cases, and we have to work in partnership with a lot of the regulatory authorities because of that, but it also helps bring a new technology into the mainstream and into the forefront, and a lot of these big companies want the tech. They don't care about the name. They don't care that it's a stable coin. They want the benefit of the technology.
Awesome. So we have a Bitcoin maximalist in the house.
I worked for one for many years.
How do you view the crowding out effect by stablecoins globally on demand for Satoshi's vision for Bitcoin?
I think, not to wax poetic because I'm not Satoshi nor am I a maxi, but I think there's clear demand for dollars around the world. And being able to move them around in the ways we've talked about, there's a major opportunity for. However, what Satoshi, I think, was really calling out is the fallibility of the US dollar, the fallibility of any fiat currency. So you have to kind of believe one side to not believe the other. But I think, what you're seeing with Bitcoin is, maybe it actually does have legs as a store of value. We've seen gold build its case as a store of value for hundreds, if not thousands of years. There are other stores of value. Matt mentioned before about, looking at what assets people can use to leverage against and borrow against. And, that's I think what Bitcoin can also be, is a store of value that someone will borrow against, and they'll use it like they look at their house and pull equity from. Does it mean that there's not a need to move money around the world still? Of course there is. And I think we're a long, long ways away of seeing a uniformity in any currency or any movement of money, globally. And if that's going to be Bitcoin, I have a lot of bridges to cross before I can get there, and for that to replace everything. But who knows?
Great. Well, we're out of time, but I guess maybe I'll ask for a prediction. Total market cap for U.S. dollar stablecoins at the end of 2024.
Oh, it's 1 year.
1 year.
Oh, what are we at now? About $1 trillion? Oh, sorry, stablecoin.
Stablecoins is
200,
100.
100 something, right? Oof.
100. Yeah. If the number right now is 100 billion,
I'll say
rough.
250.
250.
250.
And then what about a year after that?
Where are the market makers in the room? I need to. Who could take a bet on this? Do I get odds if I come back?
Sure.
I think the way I view it is stable coins will actually go up 2 to 3x the pace that the crypto market itself goes. Not just because they're means in and out, right? But you're seeing the real world use cases actually pop up on top of the actual native crypto cases. And I think we've only scratched the surface. So my bonus is based on one of those numbers going up significantly. So I want to make sure that I hit that, but I don't want to be held accountable by too many bosses in this world.
Well, Mike, this has been great. Thank you for making the trip
Thanks,
from
Mike.
Miami and
Thank you.
sharing your insights.